That reserve release, they had gotten the go-ahead from the Federal Reserve. Ken Leone is the Director of Equity Research at CFRA. Ken, good to see you this morning. I want to get your take on the earnings period overall, but first, your reaction to the B of A numbers this morning and what it tells us about where we are in terms of the banking sector.
Well, it's great to be here, Maria, and it tells us that the dark side of 2020 is behind us. The reserve loan release means that they over-reserved for calamities of write-offs for especially the consumer. We'll still see it in distressed industries. So the focus is really on 2021 outlook for recovery. And the revenue miss is probably coming from the consumer, where we saw not only lower loan activity, but also loan balances, including cards, credit cards. What that means is the velocity from the consumer, which is so important for Bank of America, still has room to grow on the upside or rebound. Capital markets probably is going to be just like the other three banks last week, very strong, firing on all cylinders. And Cheryl's comment about return of capital, the Fed still needs to release Bank of America and others from still a moderately restricted period so they can raise the dividend and aggressively buy back shares. Bank stocks have done well. The context for investors, they're up over 50% since September. The December 18th Fed move was positive. When we look ahead to this year, will this U.S. economy recover at a pace that the consumer plays in? And I think a narrative that might change, Maria, is that the consumer might be saving more. And we're seeing that in Fed data, staying in their homes, maybe improving them. But, credit card activity is driven by business and leisure travel and restaurants. Maybe that's the narrative for the second half of this year.
And what about the broader economy, Ken? What have you gotten in terms of your expectations on the fourth quarter earnings elsewhere? I mean, it just started with the banks, I know that, but your expectations for the year in terms of earnings growth, Ken?
It's going to be positive, maybe 4 or 5%. In the first quarter, we're seeing that the cyclical sectors like industrials and materials and even energy are beginning to turn around. Energy and real estate, probably second or third quarter. But financials are playing right into that cyclical play, which is why we favor them right now versus growth sectors such as technology.
All right, Ken, we'll leave it there. Great to see you this morning. Thanks so much.
Great.